Hello traders, welcome to your technical market update for Tuesday the 10th of February 2015. Let's have a quick look at the charts, and we're on the New Zealand daily chart, and as you can see we've still got this topping motion where the market just does not want to get above 74.5 cents and stay above there. So we still have seen a rally in the pair, and we've still got some resistance to get through. If it does break through this, we've still got a 75-cent resistance level for it to take out, but we'll have to wait and see. Right now there isn't much happening, and if I go to a 4-hour chart, you can see we are squeezing the top, and if we do get a breakout we could do a trade making a run towards the 75-cent range. So I'll have to see what goes on there. It's going to be driven by the US dollar, so keep an eye on the US dollar, and if we start to see it taking some people taking some profit on the US dollar positions, we could see a short-term breakout there as a trade. So keep an eye on that one on the New Zealand dollar. The Australian dollar is on a 4-hourly chart, is also in a range-bound motion. We had the interest rate cut here, and we are now above the prices that we've seen for the interest rate. Now that doesn't make a lot of sense, but it's because we are in quite volatile and unusual market conditions that the market's really gone into a holding pattern, and it's looking for the next direction for it to take. So I think that the Australian dollar will continue its range-bound motion, and if we do get any breakouts, you just got to consider the reasoning behind the breakout. There needs to be some substantial reason, otherwise you could get some false breakouts like we've seen in the past. So keep an eye on that. It's not one that I'm in love with of trading at the moment. I think that momentum's run out of it, and we just need for it to decide which direction it wants to go. Personally, I believe it should be going on the way down, but we'll wait and see. The Great British Pound, this downtrend line that it came off, we've had a bounce today. Yesterday we've seen some more selling. So we've had a little bit of a bounce. If I go to a 4-hourly chart, you'll notice that the bounce is off the important $1.52 support level, which was historical. If I zoom out a little bit, you'll see that it was historical resistance. So resistance has now become support, and we could see the market move a little higher. We've got some data out tonight that is expected to come in a little bit weaker than expected. However, if it does beat, we could see it push through and continue a trend higher. If it does shock the market and come in substantially weaker, we could see a break of $1.52, and then the price action to move back into this consolidation range that it was in before. So keep an eye there. There definitely could be a trade. We'll have to see what the price action does tonight. If the theme in the European session is the US dollar starts to come off, we could see a rise in the New Zealand. We could see a rise in the pound, considering that the pound's economy isn't in bad shape at all. It's one of the better ones outside the US. If I go to the Euro daily chart, you'll see that we're still in this range bound. We had some selling last night, and it did dip below $1.13 temporarily, and then the market sucked it back up. So it was a false breakout, and that's one that it pulled up stumps at a previous support level, and we're now back in a consolidation range. This is definitely a consolidating trade, and you're not going to see too much trending opportunities with this one until we start to get the markets involved in the grease. We're just seeing rumours, we're seeing Twitter feeds and stories coming out from journalists from all over the world on what their speculation is and what the possible outcomes could be. And the market is now just in a sit and wait holding pattern. It doesn't want to know about it. And until we start to see an official of some importance come out and make some big statements, we'll start to see some price action move. And I think things will start to heat up from tomorrow onwards and Thursday. So keep an eye on that. I don't see any trades at all. It's too hard to predict, and you're better off sitting on the sidelines for now, but really follow intensely the European Greek story, and you'll see, and make sure that before you place a trade, you've got a reason behind the direction. So if the market is starting to believe with high conviction that we will get a deal, well then we should see the market be quite pro-euro temporarily. It's all about what side concedes first. So right now it's a Mexican standoff, and we're just waiting to see. The longer that this Mexican standoff goes for, the more downward pressure we could see for the euro, and then the more closer we get to a deal, the more pro-euro it will be. But ultimately, in the long run, I do believe that the euro-US dollar is going to continue to go lower because their economy isn't doing well at all. The USCAD daily chart, it came off a little bit. It was still treading water in a sideways pattern as well, but the risk is to the downside, and that is due to oil last night did have a bit of a run, and that's because the OPEC did alter their forecasts for demand for oil, and that did put some support under oil, and that did cause the sell-off in the US CAD. That could continue should oil have another run tonight, and that theme kick back into gear, and likewise, if the US dollar starts to see some profit taking, we could see a bit of a pullback. So keep an eye on that one. We could, if we go to a 4-hourly chart, there's not a lot of trades to be had. I'd be taking profits before the $1.24. You might be able to trade a run towards the $1.24. I'd be getting out before then because we've bounced off it a number of times, and don't try and just assume that this time's the time that it will break through. The US JAP, now I put out a long-term buy on this, and it's purely a fundamental trade, and it's one that has a little bit of technical support in it as well, that we've had a breakout of this major consolidation due to the non-farm payroll. We've had a little bit of a pullback off this downtrend. This downtrend line's been touched 3 times, and on the 4th touch, I believe we're going to break it. And I do believe that we're going to see some support in this area here. And I've got my stop loss just under the previous level of major support. So I plan on holding this position for quite some time, and I do believe that we could start to see it up in the $1.23 area in coming months. So it's a long-term trade. It's not one for the faint heart, and you need to adjust your equity management rules due to the large level of risk between here and here. It's all down to the US dollar and the US dollar strength against all the other currency pairs that we have here in the majors. It's by far the better performing economy, and the Japanese economy isn't going too good, and I just see that people will move to the US dollar as a safe haven as well as gold while we go through this turbulent market due to Europe. So that's a bit of a technical update. Keep an eye on all the range-bound markets and follow the news, because that's what the market's trading off. It's trading off purely the news wires and what is coming out and what people are saying. So that's the key, and I wish you the best of luck for trading tonight, and I'll be back again tomorrow. So until then, trade well.